Good evening and welcome to a brand new show of Markets Tomorrow. I'm Kanhaiya.
Good evening, everyone. I'm Avan Dabash. Let's start off by telling you our three experts who will be joining in on the show today. Rajat Rajgarya, Director Research at Motilal Oswal Securities, will be with us on the show. Nipun Mehta, Founder and CEO at Blue Ocean Capital Advisors, also joins in, as does Sandeep Wagle, Founder and Managing Director at Aptar Technical Advisory Services. Nipun, let's start off with you. It's been a stellar one-way journey, few bumps on the way, but how would you be approaching this market with the view that now the upside's limited or that you should be a little cautious now?
Well, I'd approach it with a fair amount of caution. I think the upside does look limited, but there'll always be caveats to that statement. Clearly, in terms of a lot of the large caps or specific sectors, there has been a significant run-up that is there, liquidity-driven clearly, some related to probably a turnaround as far as industry sectors are concerned. IT, for example, is in case. But overall, when you look at the broader markets, one needs to, the valuations do start looking fairly expensive. However, when you look at mid caps, probably valuations only gradually starting to ramp up. They, on the other side, do look attractive. So depends on which segment you're looking at, depends on which sector you're looking at. But clearly liquidity driven as far as overall markets are concerned. But concerns do remain all round. You can have the government trying to talk up the market in terms of potentially higher GDP and a lot of the things that could be there. But really, when statistics come out, you're not seeing the best of statistics that come out, whether in terms of GDP growth, IIP numbers, inflation numbers, and all of that. So probably when you start looking at it from a November-December point of view, post the festive season, the figures could gradually change from the impact that they could have on some of the reforms that have come about. But at least immediately there needs to be exercised a fair amount of caution on the kind of run-up that's been there. Again, clearly liquidity driven at a time when results might not be the best. The initial set of results have been decent, but for the season, not expected to be the best.
You know, the brute force of liquidity is so powerful that markets frankly don't care about the fundamental development. And the classic case in point here is L&T. On Friday, after the bell IIP numbers had come out, they were a horrible set of IIP numbers, and on back of those IIP numbers, L&T should have plunged. But today, L&T just took a knock of 6 rupees, and buyers or dip buyers clearly dominated that stock. So that just tells you the underlying appetite to buy into Indian equities is quite insatiable. And I'm using the word insatiable purposely because this is insatiable when on a daily basis you're getting a fresh inflow of about 1,000 crore plus when we are approaching at the higher end of the range. Sandeep, bears, they keep on reminding us that there is no life for Nifty beyond 6100. We've seen this level 3 times in this year and about 12 times in the last 3 years.
Good evening, Nikunj. Absolutely, the bears do keep on reminding, but the fact of the matter is the Nifty is bouncing back again and testing that again and again. So that suggests that sooner than later it will be broken. Well, I'm not trying to say that it will be broken in the next few days or weeks. That may not happen. Or even if it happens, even if we make a new high is just some 3.5–4% away, we may come back to 5,900. So that doesn't really matter. I think the base...